Hi, this is Jeffrey Kurt Financial Group. Today is Friday, August 14, 2026. It's kind of a quiet Friday here at the in August, so just kind of go over a couple of things, but a couple of important things, maybe not so much directly related to the markets right now, but the S&P 500 will likely end up with its third consecutive up week. And, kind of some things that I think driving it, better than expected earnings, and then getting through the inflation numbers of this week without, the numbers were better than feared. So it's kind of a relief, and stocks have had a nice little run here, and, may continue. We'll see. I think the last couple of weeks of August may be a little bit slower, and then we'll pick things back up after Labor Day. There's two things I want to cover concerning the bond market, and one of it was the U.S. government announced the July numbers, fiscal deficit, and some interesting details in it. So for July, the deficit was a record for any July, $432 billion deficit in 1 month. The interest on the U.S. debt for the month of July rose $26 billion over last year's July, and was for 1 month, last month in July, $118 billion was interest in July. That puts the interest expense for fiscal year 2026, which ends in September, at $1.1 trillion. Again, just interest for the fiscal year so far, $1.17 trillion. That's more than we're spending on defense and Medicare and some of the other social programs. That's a problem. Related to this, Fitch Ratings, which is a credit rating agency, reaffirmed the U.S. government's AA+ rating yesterday. And again, we're not AAA rated by two of the credit rating agencies. A couple of things in the Fitch report that I think is worthy of mentioning. Clearly, they touch upon the U.S. strengths in terms of legal and economic strength and those type of things. But one of the said as here they say in the report. However, high fiscal deficits, a substantial interest burden, and high and rising government debt levels constrain the rating. Debt is more than double the typical AA rating. The government is not taking meaningful actions to address the large general government fiscal deficits averaging 7% of GDP since 2022, and spending pressures will mount over the next decade due to an aging population. This is going to be a problem. Not sure when it becomes a problem, but it's clear that Congress and the U.S. government does not want to tackle this issue. Conversation with a friend recently, and if you could check this, I appreciate it, but when I Googled, when's the last time Congress actually passed a budget? It was like 2007. So it's almost 20 years since Congress has actually done anything regarding spending and passing a budget. All we do is pass continuing resolutions and omnibus bills, which takes the old numbers and increases them. This is really criminal by our political leaders. In any case, we'll leave it at that. Hopefully, despite that, you'll have a good weekend, and we'll be back on Monday. Thank you again. Goodbye.